This is the first trade in 2021, and in this video I'm going to share with you how to actually determine the market direction with just this kind of the unusual type of the volume together with the price action without any kind of the indicators. And you will also find out how to actually interpret with this kind of the unusual volume with my very simple methods. So let's just get started now. So first of all, I'm going to just go back to the daily chart and let's just do a recap on the past two trading sessions. And we have just gone through two trading sessions since 2021. So you can see that in the first day, I think this is the 4th of January, and we definitely see some kind of the sell-off with the increasing of the supply. Look at the big bearish bar, big spread bar, and also a bit of the demand tail right there. And yesterday was bullish, and we attempt to recover, but only about probably half of this candle size of the bearish candle. And in terms of the bearishness, I think is not that threatening yet at the moment. Why I say that? Just first of all, look at the volume right there. So the volume is definitely increasing. There's a spike of the volume, but definitely is comparable to this two volume session and also this past few bearish volume as well. So it's not extremely high like this volume right there, or even the one that we have seen during this reaction in the previous session. So in terms of the supply level or the volume level, it's not that threatening. But in terms of the bearish price action, definitely I think we have seen a big spread, and compare it to the past few trading sessions, then this is definitely bearish. But overall, it still just barely tested the previous resistance, now turned the support level. So it's still kind of defend at the level at about probably 36.70. So not very bearish at the moment, but we just need to keep monitoring the price action to see whether there's any downside follow through, which I'm going to explain in a bit more detail in the later part of the video. So let's just get to the hourly time frame and let's see if we can extract some more from the past two trading sessions. So one thing that definitely stand out is this kind of the volume spike on the 4th of January, the first trading day in 2021. And you can see that we have definitely a big bearish bar right there, and also the continuation to the downside with increasing of the supply level. But the last bar right there actually found some support with the stopping action, while the volume just become climatic, and that actually followed by a bullish bar, try to recover a little bit there. And yesterday's session is kind of another test of the previous day. So we have seen during the non-RTH session, so acted as a test, and during the first hour, then we have a strong bullish bar, and with a reaction, next bar, and eventually we can see that there is no downside follow through, so it's just barely tested half of this bullish candle and followed by a good rally up. So that's not too bad for yesterday's session. So let me just go down to the 3 minutes time frame, and let me just show you my first trade review in 2021 on how to actually identify the market direction with just the volume and price action alone. Because on that day, the 4th of January, actually the volume alone provide a very obvious clue about the market direction, which I'm going to share with you right now, and also the one thing that you can do to actually easily interpret this kind of the unusual volume, so that you will know that what's going on. Alright, so this is actually my first trade, and I think the result is very good. It's phenomenal. Usually it's hardly get this kind of the reward to risk ratio is close to 4. So let's see what happened right there. So before I just jump into the analysis of my trade entry, let me give a bit of the context. So this is the day high, previous day high. So as annotated with this orange line right there, and that's the non-RTH high. And we have another day low right there, also annotated with this orange line. And this is the non-RTH low, which I just draw it with the dotted orange line as well. So overall, previously we have seen this kind of the sign of strength rally with a pullback, and they actually form a structure right there. So this is a trading range, or you can just call it maybe some kind of the cup and handle, or any kind of the structure that we like to name it. But anyway, right after this consolidation, we have seen a breaking out followed by a continuation to the upside, and slowly just have just a reaction. The real reaction or the real pullback or sell-off or the market correction actually come just in the first 2-3 bars when US market opened. So you can see that apart from just breaking down of the day high support now become the resistance, so it's just purely just break down right there with the spike of this supply. So when I see the first 2 bars alone or 3 bars, it's very clear to me that the market direction is bearish, and I'm in the bearish camp. And what I'm going to do is actually to find an opportunity to enter short. So that's how I actually form my trading bias. So in terms of the volume, what's so unusual about the volume? So just take a look at this. So how can we just deduct anything useful out from these volume bars alone? So first of all, if you're not familiar with volume spread analysis or some kind of the Wyckoff methods analysis, then definitely volume is a very useful way to derive the footprint from the big player. So what I tend to do with this kind of the volume is to compare the volume, because when I say the volume is unusual, I mean that the volume is very high. So when I say it's very high, how high is very high? So it's 30K, 20K, 10K. So do I compare it to this kind of the session? So if I compare it to that, then definitely is very high. It's just a spike of the volume. But this is not the right way to do the comparison, because it's kind of the different session. This is the US opening about 10:30 p.m. at my time zone, and this is the non-RTH time zone during the European London session, somewhere starting around 3 p.m. at my time zone. So definitely you will see there is a huge difference in terms of the volume. And if you compare it to the Asian session, to the European London session there, then you can see that the volume is very different as well. So we definitely would like to compare apple to apple, orange to orange. So it's just not feasible to compare it the European session to the US session. So what I would like to do, first of all, is just to compare it with the past few trading sessions within the same time as well. So you can see that this is the first few candles, and if you compare it to the first few candles right there, it's definitely a lot lower. But you might be wondering, hey Ming, I thought we are in a holiday season. Yeah, you are right. If you are saying that, then definitely this is correct. So in the past week or two, starting from Christmas, then definitely I think the volume is definitely go lower, and it's not that feasible or incorrect to compare with that kind of the volume, because during the holiday season is definitely going to see very low volume, low liquidity. So let's just compare it, just change the time frame to probably 10 minutes. So you can notice that that's actually during the first 3 or 4 candles. So this is a 3 minutes time frame, then add up to be probably 9 to 12 minutes. Then for simplified purpose, I will just use a 10 minutes candle. So each candle just become 10 minutes. Then I will just compare it with the past trading sessions, and you probably notice that I have already drawn up a line right there. So let me just zoom in a bit more. So this is the first candle right there. So this is the first candle. This is the first 10 minutes, and we can notice that it's roughly around 80k or 80 plus. But what we want to compare is actually compare it to the previous session. So when I draw a line and I just zoom out so that we can just compare it, and I'll just draw a line right there. So you can see that this is 4th of January 2021, and that's the holiday season, 31st, 30, and you can see that it's a lot higher than the rest of the session, apart from, okay, we found this is very similar. In fact, I think it's almost the same, and this one's almost touching, but still lower. And when we just look back a few more sessions, we notice that usually the first 10 minutes volume is probably roughly around there, where I draw this orange line right there. So you can see that it's a lot higher. And let me just go to this session alone. So this is 21st, and let's see what happened. And also this as well, because they are very close to 4th of January's volume for the first 10 minutes. And let's see what can we see from this 2 session alone, 21st and 18th. So let me just zoom in a bit more to see the volume and price. Okay, just bear with me. Okay, so there we are. So this is the 21st December, and it's a up volume. And what I will interpret this is, despite with this kind of the big up volume with a bullish bar, and it can't really just commit above the supply zone right there. So this is the supply zone, and in fact it just failed right at the next candle. So that is definitely effort versus results, with a lot of the effort to push the price up, and in fact it just can't stay above or commit above the supply zone, and it just failed right away in the next candle. So that's definitely bearish, and you can see that right after the failure, then there is a swing down right there, and from probably 36.70 to around 36.30. So it's 40 points. So that's quite a lot of the points in the S&P 500. And let's see about 18. So that is 22.30. So that is 18. And I think this is quite obvious that we have a downtrend, trending down, and also another swing down as well. So you can notice that this is kind of the supply on the high side, high volume. And what happened on 4th of January is that it contained this kind of the volume level. That's why I'm on a bearish camp once I see that kind of the supply level. And let me just quickly go back and walk you through my thought process, and also different kind of the scenario on how to actually play out of this trade. Okay, so let's go back to the trading time frame in the 3 minutes, and let's see where's the trade. Okay, so here it is. So right after this downswing, my bias is definitely bearish because of the unusual volume, which I just show you how to actually compare the volume with the past sessions. However, Despite having this unusual kind of the volume, we just definitely need to find a way to enter short position. So what I would like to do is to always wait for a test. So this is an action. So a downswing as an action, and I just want to wait for a test. So this is the wick rally as a test. So if this downswing actually turn out to reverse and become some kind of the shakeout type of the action and just go back up straight away, then certainly this kind of the volume or is just not valid. So what I would like to wait is some kind of the test and also the confirmation. So the test is obviously is a wick rally up. You can see that it's just barely go back up to test this. Now the support become the resistance 37.50. So we know that the rally is weak, and I just want to wait for the confirmation, which is this breakout type of the trade. So once the price actually just break below the previous swing low, I just enter the short entry right there. So right after the close of this bearish bar, I enter my short entry with the anticipation to travel to ride the downtrend to at least probably 3700, so which is coincide with this orange trend line that is kind of a demand line from the up channel. So I also use my trailing stop to trail and lock in my profits. So you can see that I think eventually it got stopped out somewhere around there. So there's a climatic selling climax with a spike of the supply level, and followed by attempt to rally up. So that actually stopped me out because I just trailed it with quite a tight stop loss, and once it's just rally up, then it just stopped me out right there. And that actually just results with a reward to risk ratio of close to 4, which is very high when I day trade. So usually it's about probably 1.5, then I'll be quite happy. If I got 2, then that's bonus. Alright, so that's the trade that I had in 2021, and this is how I actually just use the unusual type of the volume together with reading the price action and to determine the market direction. Alright, so let me just quickly go back to hourly time frame, and let's just talk about the current market and also the trading plan. So right now, since we have a sell-off on January 4th of January, then I think that the playbook or the trading plan right now, it could be this is an obvious support level 36.70, and the resistance level will be at somewhere around 37.20. So you can see that right after yesterday rally, he actually had 2 attempts right there and got rejected after it just tested 37.20 with this rejection tail, and followed by a reaction during today Asian throughout the European London session, and currently we have a big bearish bar going on. So I think that is quite a nice move. If you can just go back down to test the yesterday low, or even somewhere around 36.70, then we can just look for any kind of the reversal type of the signal, and to see we can just go for a potential long. Otherwise, definitely this is a obvious resistance zone at 37.20, so that could be a good short opportunity. So this is how I will plan my trade for the session later. Alright, so in terms of the overall trend, I think is still up for the intermediate to the larger time frame, then definitely still up. For short term, it's kind of in the trading range, probably somewhere around 36.70 to the 37.70. Alright, okay, so this is the end of the video. Hope you enjoyed it and get something useful from the video. If you like the video, just click like and also hover to my name or picture to follow me. Thanks for watching. I will talk to you soon.